still see some green for the Dow, up 80 points, NASDAQ up 48. There you have it. David Stryzewski with us. I read your stuff, David, you know that. You say the U.S. can hardly afford peace right now. You've got to explain that.
Well, great to be with you here this morning, Stuart. You know, the United States right now is spending so much money. I mean, Janet Yellen gave us the figure that we blew our budget by about $2 trillion. You know, we hit over $33 trillion just about a week ago, and we've spent almost $500 billion since then. We're on track right now to even hit $1 trillion this month. So this doesn't add up to a great story here for America. You know, if you just look at the big four expenses today, Medicare, Social Security, deficit spending, and defense spending, we can't even afford that with what we're bringing in taxes right now. So we've got a lot of challenges in front of us. I'd say the three things that we could do here today are, you know, we could either do some budget cuts, which, you know, are obviously hard to do. No one likes to take things away, especially in political seasons. We've got the opportunity to raise taxes, which is not a popular idea going into the election cycle here, or we could just keep printing, you know, the tax of least resistance, but that's inflationary. And so this is a critical issue for us right now, because if we're fighting on multiple fronts here, both Ukraine, now we're going to be adding aid to Israel, who knows what happens with China and Taiwan in the next whatever time frame, we're extending ourselves very significantly in a way that we are going to have a hard time affording. And so, in my opinion, printing is the equivalent of defaulting on our budget. You know, if we establish a budget and we go, hey, I'm going to go further than that, that is the equivalent of defaulting on our budget. I don't think this spells a good message here for us as we're looking forward to the future.
I mean, the case you've laid out is one where the stock market does absolutely nothing except go down. Is that what you're looking for?
Well, I think that we're on the verge of a recession that's likely going to be characterized as a rolling recession. And the reason for that is because the credit cycle's changed. You know, when everything becomes more expensive, it affects everything. In fact, it's global. You know, everything's getting repriced right now. So, yes, I do expect a pretty significant downside here to the market cycle. I'm hoping that we don't hit a worst case situation. I'm hoping that Americans, this resilient organization and institution with people that step up to the plate like we have in centuries before. But we find ourselves in a place today that is deficit spending out of control. And we have to make the hard choices right now to look these things in the eyes, make some real cuts, or make some decisions about how we want to go forward here into the future. But there's a lot of very important things taking place here today that we need to weigh on. Just, are we really the diplomats of the future, or are we just going to allow China to do that?
We shall see, but I'm looking at the U.S. two-year Treasury yield just over 5%, the one-year at 5.38%, and boy, that looks pretty good to me. David, thanks for joining us. See you again real soon. Lauren's looking at the movers.